All right, we're back for another episode of the Mortgage Show, last one of 2025. This year has sure flown by, but it's been a good one. We'll get into all that. Betts, how you feeling today?
That is great, man. Thank you for asking. I can't believe we're already sitting here in December, our last podcast of the year. This
Yep,
year's this year has just flown right by, hasn't it?
it really has. And today is Fed rate cut day, so we'll make some predictions about that in a second and see how it all lands afterwards. But yeah, it's been super fast year, man. Our first full year at CMG. A lot of good things, a lot of things to be thankful, but like I said, we'll get into all that stuff too. So, big news for today is that rate cut. I don't know if you just want to jump into that before we get into the fun stuff.
Yeah, so I guess the to bat lead off with that is the simple fundamental for everybody is to remember the Fed rate is different than the mortgage rate if you kind of want to get into that, Rand.
Yeah, I mean, we had this conversation a million times, so we could record it from previous podcasts and insert it in here. But when the Federal Reserve decides to cut the federal funds rate, that doesn't necessarily mean that they're cutting mortgage rates. Mortgage rates are based off the 10-year Treasury. That stuff responds like the market, like the stock market, where there's constantly information being gathered, and those treasuries move according to what they see, jobs report, economic data, all that stuff, and they change in anticipation of what we think the Federal Reserve will do. So where we stand right now with mortgage interest rates, generally in the low sixes, that is a 3-month high from where they had been at that time 3 months ago. That is the market pricing in what the Federal Reserve is going to do today. I think the expectation is that they cut the federal funds rate by 25 basis points, and anything different from that would move the market in one way or another. If they didn't cut rates, I think that'd be a surprise. We'd probably see mortgage rates go up. If they cut rates by more than 25 basis points, which is super unlikely, rates would probably respond positively to that as well.
So you just dominated that, and the thing that you just said that sort of makes me want to piggyback it is like 3 months high of mortgage interest rates. So why did that happen? So everybody hears that the Fed rate drops, they equate it to the mortgage rate. But behind the scenes, what sort of happened to make the mortgage rates go up? You know, it, I can stumble all over this, but I think the simple fundamental is that economic data continues to go back and forth in a seesaw manner, and
Mm-hmm.
really nothing has happened in this 3 month period to push them down further. Yeah, there's been a little bit of upward pressure, and that tends to happen after a Fed cut. Why does that happen? I think the simple way to explain it is the cost of borrowing for a consumer gets lower when a Fed cut happens. Okay, so why do the bonds react the opposite way? You can't have your cake and eat it too in this scenario, which is just a simple entry level way of me just saying that they don't always act hand in hand. Mortgage rate, Fed rate. So yeah, we've had a little bit of upward pressure, and I think that's mostly economic data. Some areas of economic data, Randy, have been like, wow, that's really alarming, but other areas have been sort of driving these rates up a
Yeah.
little bit.
And one thing to know too is that not only does the Federal Reserve make a decision on cutting the Fed funds rate today or not cutting it, but Jerome Powell or the Reserve Board as in general would produce a statement with what their expectation is moving forward. And that a lot of times that commentary on their decision moves the
Yes.
market more than what their decision is. I think either at the last Fed funds meeting or the one before it, Jerome Powell said something about just they're being unsure that they're going to cut rates as much as they expected to in 2026. And just that language pours water on the fire and
Yeah.
stops rates from going down. So I think that has a lot to do with why rates are not lower than what people maybe thought they would be 3 months ago.
Hey, excellent point there to bring up. And I think the reason why Powell cautions, or he sort of mentions, future rate cuts maybe not being as frequent, behind the scenes with the tariff stuff, the Fed has been mentioning the threat of inflation brought forth because of tariff stuff, and that just hasn't been happening. But the Fed has been cautioning us for for it, so it's like it's not here yet. But anytime you hear inflation, mortgage-backed securities do not like it, and it pushes interest rates up organically.
Yeah.
Randy, that was actually an excellent point to make
Yeah.
as far as why mortgage rates have gone up. The language of the last meeting did
Yeah.
spook the market a little bit.
Totally. So pay attention to that. I mean, expect the 25 basis point cut, which is good, but see what the language says. They'll set expectations for the next meeting and for the next year. And if they said anything like hey, we actually do think we're going to cut rates more than expected, then that's going to move the market, and interest rates will drop. But I think that that's pretty unlikely right now. I'm not expecting like a big movement today or after today. But it is a big part of our job, and people come to us because they expect us to have an opinion on it and try to explain it to them. And hopefully that explanation helps for whoever's listening to this.
So could we do a quick segue to, okay, so we're talking about the interest rates, we're talking about mortgage rates versus Fed rates. I get this question a lot, and I'm sure you do. What is my interest rate? Why is it the way it is?
Mm-hmm.
Should we quickly reiterate like the LLPAs and why somebody lands where they do with interest rates, just quickly, just to
Yeah,
give.
I think it's always good. I mean, we've probably done something similar in the past, but I think it's always good for new people that are listening. You know, LLPAs is a tricky concept, but why don't you just give it a go on why interest rates get priced the way they are?
Loan level pricing adjustments is what it stands for. And basically, the guys behind the scenes analyzing risk basically put adjustments to interest rates based off of certain risk. For examples, your better case conventional interest rate is if you have a mid FICO score of 760 or greater and a 25% down payment. So if you
Mhm.
come to us with those variables, you're getting the floor interest rate. That is going to be the best case scenario. But as you start tearing down and things change, lower down payment, maybe your FICO score is not as nice as a 760. All of a sudden, you have all of these adjusters calculated on risk, and you're just throwing darts. If you're 6% on the better case scenario and you're half the variables on another, your interest rate is going to be up by 7. It's nothing that Randy and I are doing. We're just legit giving an interest rate based off of risk. And those are the LLPAs that dictate it. And behind the scenes, with the Fed stuff that we're talking about, that floor interest rate is influenced by the economic data. And then the LLPAs get you to where you land.
Yeah.
So
A few other ones to consider: type of property, so it's more risky to have a condo than a single family home. So the adjustment for those is higher. Multifamilies are higher. Whether or not you're going to occupy the property as your primary residence, have it be a second home or an investment property, that changes things as well. And then also, it's not an LLPA, but how long you lock in an interest rate for
yes.
dictates what that rate's going to be a little bit too. So, shorter you lock in an interest rate for, the less risk there is for that money. So they're able to offer best case pricing. That shortest period that we can offer is 21 days. Then there's also 30 days, 45, and 60 days. So the longer you lock in an interest rate, the worse that rate is. Not by much, but it is worse. So all of these factors do go into what the pricing is. And it's not as easy. Like I get this question quite a bit. It's like, send me your rate sheet for today. And it's like, and I can answer that question gracefully, but it's not as easy as just like, oh yeah, here it is. I'll just send it to you. My rate is this. It's like, all right, we need to put all these variables in the software and it spits out what the rate is, and that stuff changes definitely every day and sometimes multiple day when it's a volatile market.
It's it's such a fun process to go through when you get the question, what is my interest rate? It's like behind the scenes, like the Russell Crowe Beautiful Minds thing starts
Yeah,
popping on the screen, and all of a sudden it's like, hey, your interest rate's 2%. And actually, that's not the
but
case.
but it's I do feel like I'm come across as like deceptive or evasive sometimes when I answer that, and it's like, please no, it's not the case. It's just there's no scenario that I could tell you exactly what the interest rate is if you're catching me and I'm driving in my car in the moment. Like I can speak in general for what I've seen, but until I price it in the calculator and we have some of those variables like when are we trying to close kind of scenario, like that's when I could nail it down exactly. So anyways, good stuff to keep talking about though.
The last thing for me is just to remember slow to heal and quick to bleed is
Mhm.
always has always been the philosophy when it comes to pricing of interest rates. When we are in this area where we have amazing economic data, we have high inflation, oh my God, do we bleed? Interest rates just fly up so fast. I'm always caught off guard by these like local and national reports that say interest rates have gone down X in this period of time, because behind the scenes we're watching the trading of mortgage-backed securities, and the slow to heal
Mhm.
part of this is that there needs to be some momentum in this for interest rates to start dropping, to notice the eighth, to notice the quarter, to notice
Yeah.
the 3/8. You need some momentum, but man, on the opposite side, it's like a levee breaking sometimes. It's
Oh yeah,
insane. So
definitely. But so one example of when it got really good really fast. Do you remember President's Club 2020, right
Yes.
before COVID hit. I think we were going to Cancun, and there were people starting to wear masks on the planes, and it was one of those things you hear the news stories while we're traveling. It was like
Yeah.
February, and obviously COVID was in March. But something happened, man. Interest rates freaking dropped, and I remember that plane ride working the whole time with my
Yeah.
laptop to like lock in a bunch of refis. Like that was the one time where rates just freaking fell off a cliff, where it is usually the other way, where it's like they go down gradually, but they go up like very sharply. Never forget that, dude. That was wild.
That was wild. And like, I think if you're listening to us and you ever want an idea of what you think it's doing, follow the 10-year treasury. Randy's referenced it a few times. But if you're noticing money flowing out of the stock market, that's a sort of a riskier investment. When people get conservative with their money, people are pulling it from the riskier areas. And typically the money then flows into bonds, which back mortgages. And then all of a sudden your mortgage interest rates are coming down. So I guess the philosophy here is bad news is good news for mortgage interest rates.
Yeah.
And everything that Randy and I just rambled about for about 9 minutes sort of determines some of that.
Yep. Yep.
Yeah.
So good stuff, man. Does that wrap up our mortgage talk for now? Till we move into some of the fun stuff, or any other mortgage related stuff that you want to talk about?
Yeah, I think I'm good with that. I like where I think we just dominated that. No big deal.
Yeah, fun 11, 12 minutes. But with the year winding down, it's like we can be a little bit retrospective about what our year was like, in the business and life. And I think we want to talk about some of the things that we're thankful for as 2025 comes to close, maybe some things that we're looking forward to in 2026. So did you want to start? I have no idea what you're going to say, but
I'm thinking.
let's talk back and forth. What are you thankful for?
Okay, so are we going to do personal or business? We mix it, right?
I have some off the top of my head in either direction, so I'll share them all.
I got to say, first and foremost, with everything going around us, I have been super thankful for my health. I've been proud of your weight loss. It motivated me for my weight loss. Randy actually got, well, Randy, it's interesting where you draw inspiration from, right? Yeah, I mean, it just happens all the time.
Yeah.
Randy starts coming in the office, and I'm like, Jesus Christ, he's starting to lose a lot of weight. What the hell is he doing? So you start asking some questions. But Randy got me into pickleball, and it's been nice chasing a ball again, and it's been great sweating again. And as the LBs start freaking falling off, it's like a ball rolling downhill. All you want to do is lose more weight. So I'm thankful for my health.
Love
Just
that, dude.
batting lead off with that.
No, that was actually one of the personal things I was going to say. Like, I am thankful for our pickleball situation because that's something that I look forward to every week. So me, you, old partner Bry, another friend of ours, Jay, we play every week, every Tuesday, and it's part of our routine. And I am thankful for that because it's just a thing to look forward to. It's hanging out with your boys, but also doing something healthy. Like, how much of our life is hanging out with the boys, grabbing drinks? You know what I mean?
Yes.
Doing something like that, which is great and love that stuff. But like, we're hanging out with the boys doing something that's like competitive, healthy,
Yes.
It's just like good for mental health, physical health. So it's like, I am thankful that we have that to look forward to every week. Been doing that for like sometime since the summer, right? End of summer, August maybe. So good 4 months.
I got to tell you, I hope it goes for the rest of our lives. I think it's a forever sport. It's so fun. So yeah, I'm thankful for all that, man. Thank you for getting me in it.
Love it, dude. Freaking Pickler should give me a month off on my freaking membership, man. Getting people in the door.
That is not a misstatement. You have brought a decent amount of people into the Pickler.
Definitely, dude. I love it, man. Like, I want to have a bunch of 40-year-olds that are all playing that. We got to get a group of 20 people that we could connect with at any given time to grab a couple courts and play. But anyways, we could we should probably just do a pickleball podcast at some point.
Yeah.
But yeah, good. That's a good thankful.
Holy shit. We should do a pickleball podcast at some point. That would be, wow, that would be money. Okay. So another thing on the personal side, I am thankful that I've somehow kept my mind right with the kids moving out of the house. Like, I have transitioned. I'm 47 years old. All of a sudden,
mind right?
Oh, Jesus, I know.
That's a big change, dude.
Shout out to everybody listening that has gone through that change of full-time on with your kids to all of a sudden, what the hell am I going to do with myself? I have never been short for hobbies, things to do with friends, but when that void happens, there is a rewiring of your brain. So thankful I got through that.
Love it, dude. Hopefully 2026 is a good year. with that stuff because it's a mind game, man. With that, I imagine I'm in the middle of it, and I'll miss it when I'm gone. When it's gone, I'm sure. Yeah,
Yes.
yeah,
So Randy's turn.
yeah. Okay, so work wise, we are 18 months, 20 months into like our CMG aspect era of our
Hmm.
career, and I actually got to say, like, as we have a full year at CMG under our belt, like I'm thankful that we ended up here. It could have been any company that acquired Norcom back in April of 2024, and it was CMG. And I would have never thought that I would work at CMG at the time. I was aware of them. There's a million CMG loan officers. Knowing us, if we were evaluating our options to leave Norcom, we probably would have went to a million places other than CMG. But it's been freaking great being part of CMG and all the people. We got a chance to hang out with some of our colleagues last night at the mini bar in Portland. It seems like we're doing more and more of that stuff lately, which is great. And it's starting to feel a little bit like a family, like we had at Norcom before that all came to an end.
Yeah, yeah, I agree with all that. I was actually chatting with Ali last night of like last night for me was like one of those areas where I'm like, all right, I'm really kind of comfortable outside of doing mortgages. I'm looking forward to actually seeing some coworkers. So
Yeah,
I'm settling into that area too, and it's feeling pretty good. This is a really good company to work for.
it is. Yeah. Yeah, I mean, we get some big time loan officers that do a lot of business, have a lot of experience, people that we can lean on for help and support and inspiration. Great leadership. I mean, we had Chris George, who is Chris Matthew George. He's CMG. He's owned the company for 32 years. We got a chance to see him talk last week, and I don't want to get into everything he said because in talking to him, he came on the podcast last year and he was like, "Hey, book a time with me. I want to come back on the podcast and talk about a lot of the things that CMG has going on. They just acquired a bank. I think 2026 is going to be a really different year for CMG. I'm excited to
Yes.
tell our referral partners about that. But like, I was super inspired by him, and I was like, damn, this great guy, great leader in the industry that we get a chance to spend this time with.
62 years old, just lost 44 pounds.
Yeah, great.
Uh, Dude, he just wants to get better every day, but he's doing it in a scale that I can't comprehend, or an
Yeah,
area that I can't comprehend. And the way he's scaling it is pretty impressive. So until these things come out that he's trying to change, I guess Randy and I will table it, but there's some big stuff coming for us, I think.
definitely. What always surprises me about CMG is just the size of it. Because here we are in northern New England, and we have like our group in northern New England. So when we talk about seeing our coworkers, it's like I only really know people from New England, like our underwriters, our ops people, like they're all New England people, and that's great. But then you realize that there's a whole company outside of that.
Yeah.
And he said it the other day that there's 3,900 people that work for CMG. 3,900 people. There was like freaking 250 people that work for Norcom. You know what I mean? Like,
Yeah.
it's just, it really is insane the size of the company and the resources that we have and the influence in the industry we have. I think CMG might be like what was it, biggest, like 10th or 11th biggest lender in the
Yeah.
country. And like a lot of the names that you see on there are like Chases and BOA and Wells Fargo. It's like those people aren't really our competitors. Those are just like big banks. Like we are on the list with them as just a company that is a residential lender. And there's other ones that you recognize like Guilds and Fairways and things like that. Like those are our real equivalents. But like, dude, we do some business, man. CMG is a good company.
Thankful to have landed at an awesome company. We really are. So I'll piggyback that with an additional work thought is the non-QM market. I've talked about this a couple times. I can't believe some of the loans that I'm getting through, but I'm not saying that from the standpoint of I think they're bad mortgages. So these are brokered out loans. They're 20% down fixed rates, and it's nice to finally lend in an area after. So financial reform was what, 2011, and then the laws came in 2012. So lending changed for the last 13 years. We've had very generic product set, which has stabilized the mortgage market, but there's been this void, in my opinion. And I guess the type of borrower that you can describe is like the atypical borrower, but if you look at their credit score and you look at their assets, they clearly have an ability to repay. High
Mm-hmm.
credit scores, ton of money in the bank. So why haven't we been able to get them mortgages? Well, we can now with non-QM stuff. So I don't want to ramble about some of the examples, but I can tell you if you're listening to this, if you've got a self-employed borrower, an investor looking to buy something, maybe an Airbnb property, multifamily, the possibilities are endless now to finance for these people. So I'm
Yeah.
thankful for that product set.
Yeah. It is nice. I mean, I would just kind of even add to that. Just thankful for all of the products that we have at CMG that maybe we didn't have towards the tail end at Norcom. The second home stuff, the investment property stuff, the land stuff. I mean, I've been doing a couple construction loans lately, which is great. All things that we weren't really doing towards the end at Norcom. So, but adding on QM, DSCR loans, all that stuff to it, and we really can do mostly anything. I always tell people, like, if you need help and you're not sure where to go, send it my way. If I can't do it, I'll definitely tell you, but we probably can.
I wonder if the people are listening, whoever's listening this far, if you're starting to think, okay, well, what is it, Randy and Chris? What can you do? Maybe we ramble here for a second.
Right.
Dude, food truck owner that I just did, self-employed, shows zero money, but if you look at his bank statements, oh my God, the amount, Megalodon deposits. I mean,
Yeah.
I was just so impressed by that. So we did 12 months of bank statements. We analyzed income, and this person was able to buy a 3 unit. They had money in the bank, and it was just sitting in the bank, and they wanted to put it in real estate. This is a borrower that I would not have been able to do. Now they have a 3 unit investment property.
Yeah.
That stuff is nice.
Absolutely. I had a couple like that. I mean, I had a borrower that bought two multifamily properties, and it didn't even have to show his income because it was just based on the cash flow of the properties themselves. And those are called DSCR loans, debt service coverage ratio loans. Like, easy, like minimal documentation, super quick close. Had another self-employed borrower, same thing as it sounds like your food truck guy, just doesn't show a lot of income on paper. But when you look at the deposits, 12 months bank statements, income was great, and we closed no problem. So, like you said, I don't want to beat a dead horse, but that's stuff that we weren't necessarily doing before, and I
No.
would like to do more of moving forward.
Yeah, and one that pops to my head, and then I'll sort of wrap that thought up, is I had somebody approach me that wanted to purchase into an LLC, which was, we had an innumerable amount of product options prior to 2012 that would allow you to purchase into an LLC. So similar to yours, Randy, DSCR. So what that is basically we did an Airbnb monthly rent comp.
Mm-hmm.
So the number that came back in the appraisal report was greater than the principal, interest, taxes, and insurance, and that's the way we lend it on it. The property made sense, so we gave them a mortgage. It was 20% down. So
Yeah.
yeah,
That's an important part to know. Like, a lot of these loans, you do need to have a bigger down payment, but so that does, like, weed out some of the people. It's not necessarily gonna be a first time home buyer all the time with minimal down payment, but the people with the big money down and the good credit with the unique circumstances, like, those people should be able to get a mortgage. So glad we can help them out.
another quick thing. It's really nice actually walking into our building. If you haven't been in our building, we highly invite you to come in and check us out. When Randy, Brian, and I bought this, it needed some work, and we put a lot of work into it. And I mean, don't you feel good about walking in this
It's
place?
awesome. Yeah,
Yeah.
I love it, man. It's a great location, highly visible in Saco, Maine, and plenty of parking. And then the inside just looks great. I mean, we've retouched every surface, and every time people come in to the office for meetings or closings, I mean, they love it. So that's definitely something I'm thankful for. I'm also thankful for having the boys downstairs as tenants of ours, Social House Kitchen. Love having that place down there, man. Down there all the time. I only wish they were open on Monday so I can grab my drink on Monday mornings when I need it after a long weekend and it's cold outside. But love having those guys downstairs. We're lucky.
They are the best tenant. They take care of their unit. They're proud about their business. They're good for the area. It's really a win-win for us.
Yeah. Food's good, coffee's good, drinks are good. Always a ton of people.
Yeah,
You
and
know,
like Jamie and Duncan, if you're listening to this, continue to save your money because there will be a day that Randy and I sell this place, and you guys need to buy it from us.
yeah.
Yeah.
So, one other thing that I'm thankful for, I don't know how much longer you want to go, but I don't tell her enough, but I am thankful for Emily Daly, our processor who's been with us for 10 years now.
Yeah.
What she does for us, it allows us to, like, do other things. I'm always on the road, dude. You know how many times I call Emily per day while I'm driving, and it's like, hey, can you just forward me something that I need that I can't access? And she's processing files. She's talking directly with our customers. Like, I'm very thankful for everything that she brings for the table because it allows me to be successful in a different way, and I'm sure for you too.
Emily, I hope she's listening to this because she did something when we did get acquired by CMG that was not typical for her workflow. She did not want to talk to humans. She just wanted to process
I
the
don't think she
loan.
still wants to talk to humans, but she does a great job with it.
But I've noticed, so basically what that means is in the past, Emily would kick us over a list. We would go to the consumer and say, hey, you need to get us this. The underwriter wants this as part of your mortgage commitment. We knock off that list. Eventually, your loan's clear to close. Now we just have Randy and I have the time where we're just networking, meeting new referral partners. That's basically our day. And Emily is talking to the customer. And I got to tell you, you're doing an amazing job of that because I know you did not want to talk to humans.
Yeah, and it's a tough role. I don't think borrowers understand what goes into the loan approval sometimes. Especially when there's like money movement. I find that to be very stressful. Some borrowers like, why are you asking me for all these bank statements? And Emily's the one that's kind of sifting through them and telling the borrower what works and what doesn't work, and then going back and asking for additional things, and sometimes for a third time, which is probably annoying for the buyer. And it's not like Emily wants to do it, but like, so it takes to get a loan. You have to document where your money's coming from. If you have 5 accounts and there's money moving from all of them, and there's money moving from an account that you didn't originally disclose, and now we got to get that statement, and you're sending screenshots from your phone and doesn't have any identifiable information, just like Emily is the person that's kind of working through all that
Yeah.
stuff we need to get it done right so we can close. So I'm thankful for that.
Wrapping up my thankfuls, Haley Bedard, consistent in my life. My little girl, oh my God, Randy, she is a facsimile of me with her mom's brains. It absolutely terrifies me sometimes when I listen to her. I'm like, God damn it, that's me. My dude Mason, my stepson, and I have this sneaky thing that I wasn't expecting. So we talked about Lucy, my dog. We had to put her down earlier in the year. Dude, I was not ready for another dog, but I'm a dog guy. So I'm like, all right, let's jump into this. I think you're going to love this. Lucy was the GOAT. This dog just was so easy from the start. The synergy that I had with this animal was just indescribable. This new dog is an absolute fucking lunatic. But dude, she gets it. She gets it, but she's like, I am gonna fight you every inch of the way.
Yeah.
And at first, I just wanted to put this dog in a headlock like every 5 seconds that I interacted with her. Now I just laugh. The amount of
Yeah.
yelling, dude, the amount of yelling my wife does in the house at this dog. Eventually, I'm just gonna say to Allie, dude, just fucking give up.
Tatum. Love it.
Tatum.
Love Tatum. Tatum's made
Tatum.
some visits to the office.
Yep, she's a lunatic. So
Yeah.
yeah, so family, friends, love you all. Mortgage
Yeah.
business, the referral partners, thank you.
Yeah, I was gonna say that. I mean, same thing. Well, I mean, love my girls. I'm a girl dad, so I got my 3 daughters that I love and wife, and my dog Mace, who's a girl as well. So I'm surrounded by all of them. But thankful for all that. That goes kind of without saying. I mean, it's why we do all this crazy stuff that we do all the time, chasing people down for mortgages. So, and then yeah, I mean, referral partners and clients. I mean, are you kidding me? It's the best part of the job. I mean, we got referral partners that are like friends at this point,
Yep.
and that's the fun part for me is that you know, we have this common thing where we kind of need each other, and you form friendships that extend outside of business, which is awesome. And then the clients, I mean, dude, there's so many great clients and customers over the years. It's just been a blast to help so many people get into homes at this point.
Too, is there's a consistency between you and I. I know a lot of times, you have a million thoughts swimming in your head. You do a lot of things outside of work also. So you've got different things that you're thinking about. My life's a little less complicated, I think, than yours these days, but
Yeah,
I,
maybe.
I like I like that I get up every day and I know I have this building with you. I know that we're a teammate in that, and it's been in a world where it feels like there's never consistency. It's nice to have that. So thank you for that.
My rock, Chris Bedard.
It's
Well,
it's
it's been a long
it's
time, dude. It's been a long
it,
time.
I have to say, I don't want to do this to you, but I I met you. So this is yeah, I'll bring it up. Screw it. Randy had a cup of coffee dating my sister years ago. And dude, that was the first time I met you. You actually dropped my sister off.
Years ago, dude. 25, 27 years ago.
And and listen, man, when you're a brother to a girl, I don't know what went through my head back then, but I was like, all right, this guy's pretty cool. And then, it didn't obviously, you and Tara and you guys have been together forever. It's so funny. That was my first interaction with you, then your accident, and I was so excited to see you recover from all of that stuff. And here we are all these years later.
Neighbors,
Yeah.
neighbors for 7, 8 years. I always remember Haley's third birthday party because I think that was our first birthday party when we were in the neighborhood. All the people coming over.
Yeah.
And now look at us, all these years later. It's kind of funny. The fun things
Yeah.
we've
It's
done,
nuts.
good memories.
The trips, the work trips, it's crazy. I've forgotten more than I remember at this point.
Yeah.
So yeah, it's been a good run, man.
So got a good run ahead. So I think that's a good place to end it, dude. I mean, I don't think there's anything. I mean, I'm sure there's a million things I'm thankful for that I'll think of afterwards, but those are the things that I want to talk about as 2025 comes to it comes to a close, and looking forward to 2026. A lot of good things coming ahead.
To quote the great William Belichick, we're on to Cincinnati, or we're on to 2026.
Is Belichick still great? Is he still the great Bill Belichick?
I just got my hair cut and we were debating that. I think the only job that he should get is the New York Giants, and they're not a good football team. So do we watch 4 years of him trying to win 5 games a year so we could have the NFL wins record? I'd be okay with that, but
I'd be
I don't
okay
know.
with that.
I don't know if he's the great Bill Belichick anymore, and it's kind of weird.
Kind of weird, but I do love that quote. On to Cincinnati it will be a thing forever. So we're on to 2026, my man.
All right, guys, thanks for listening.
All right, thanks, guys. See ya.